Alright, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Yes, the 17th of November. Look, this is a quick video preview for the webinar, which is going to happen in a few moments, so do not tune out. We're going to talk markets. We're going to see what's happening this week. We know that there is speculation, or maybe it's already kind of a done deal, that on Thursday we're going to get the NFPs. Look, about all this and a little bit more in the webinar right now, so hopefully you'll enjoy it, and I'll see you in a bit. Alright, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is the 17th of November 2025. Yes, today is Monday. Ladies and gentlemen, welcome. I hope you all had a fantastic weekend. You're all feeling nice and relaxed and ready to hit the market. Sorry, my nose is itching a little bit, but hey, look, I hope you're, like I said, you're all ready to hit the markets. Look, what can I say? It's a busy week. It should be a busy week again. You know, maybe last week was some kind of ish, but still we did not lack market activity. The markets were kind of on a roller coaster ride, I would say, and well, I think we will continue doing that this week as well. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Like I said, we're watching some data this week. We're watching the markets. Look, also, before we go any further, as always, let's quickly have a read through. Actually, no, not a read through. A mentioning of our Markets.com website. And also, I wanted to show you that if you go and learn and you go into webinars, you're going to find my webinar, Zoom webinar, which is going to happen on the 26th of November. And basically, this is going to be the fourth episode in the series of top indicators that I pick up, and then we apply it in real life market action, and then we see if, you know, if it's any good or not. Basically how we applied with real life trades on our demo account, and I think that, yeah, this is probably the best way to check out, you know, if the indicator works or not. So tune in. I think the first 3 sessions went fantastically. They were great. I hope this one also will go great. Look, you can find the details in the description of this webinar as well, but like I said, you can always go on our website and to learn, and then click on webinars and you'll find it there. So, ladies and gentlemen, let's have a look at what's happening with the economic calendar this week. And I think that this week we also we will be having some BLS data, so Bureau of Labor and Statistics. And you know what? Actually, let me start off with their schedule because they have updated the schedule. So this week on Thursday, apparently, we should be getting NFP. Look, why I'm saying apparently, although the majority of news outlets are already kind of already are, you know, saying that yes, we will be getting that. But as I keep on saying, I will believe it when I'll see it, okay? I'll believe it when I'll see it. If we get that, great, wonderful, you know, we'll see how the market can react. In general, we're going to be getting the September non-farm payrolls. There is a big chance, and I think that this is what they're trying to teach, or not teach, but like to get the overall market participants to kind of, you know, have their piece with that there's not going to be an October NFP reading. Look, we'll keep an eye on the September one. I don't know. Should we trust that data much, given that maybe it was not collected properly or something? I think that one should be okay-ish. But again, of course, it will be quite interesting to see what's going to happen, you know, what kind of data we will get actually. So is it going to be a good one, or is it actually going to be redacted, you know, so to show that everything is fine in the economy? Look, again, I don't know. Like I said, it's a mystery, and it's really difficult to kind of draw some conclusions here, or in general, it's difficult to kind of accept it as it is, given that what we had recently with all this government shutdown and all this, AI and all these job cuts, and yeah, that's like I said, that's a little bit of a tricky moment right there. So yeah, we will be getting the data. So yes, keep an eye on that. Now, and we should be getting also a continuous initial and continuous jobless claims. Now, again, that should be, again, it seems like it should be according to on Wednesday. Let me just double check if that's going to happen on Wednesday, because normally these come out on Thursdays. Because look, we have such a backlog here. 1, 2, 3, 4, 8, 4, 5, 6, 7, 8 numbers that we need, 8 data sets that we need to get of continuous and initial jobless claims. I don't know how they're going to deal with that, but certainly, is it going to be all at once, or is it going to be like, step by step? So we'll see. But anyway, let's actually start from the beginning. Let's go from Monday here. The GDP growth preliminary, the Japanese one, and it came out a little bit better than the forecast, but still worse than the previous. In general, the GDP growth analyzed, GDP Q on Q, yeah, that's not sparkling very well with the economy. Yes, I get it; those are preliminary numbers, but nevertheless, it's still a little bit worrying. Then in terms of other data, industrial production final from Japan, we got better numbers, the month-on-month and year-on-year numbers. Yep, better than the previous, so that's in a way good. For now, we're monitoring carefully, but I think that everybody's kind of discounting all these pieces of information and focusing more on the U.S. data from the Bureau of Labor and Statistics. And last week, we talked about, I talked about this. I talked about in my webinars. Where's that? This is the Friday's webinar, where I said that, can we trust the BLS data? And that's my problem right now. Yes, I think that it will require a little bit of time until we start, they start getting back into the proper process, and we'll start seeing some sort of sanity in the numbers. But again, for now, I think that everything is up in the air. I think that the market will pick up, despite maybe the fact that the data might not be the best quality. The market will still pick up on that, I think, in my opinion, because I think the market is just hungry and just trying to understand, make sense of what's happening, because at the moment, this whole technology boost that we saw, it's not really making much sense anymore. All these capital expenditures, I said it on Friday. I had a big discussion on Friday, or actually more of a monologue on Friday. So Friday's video, you can check out that one, about can we trust the BLS data. But actually, I picked up on AI a lot as well, so you can watch that one just in case you have your chapters in there and timestamps, so we can scroll through it a little bit. But anyway, so yeah, that's, like I said, that's my issue right now. That data, yes, the data is not maybe the best of qualities, but I think the market will pick up, and that's why we will have this roller coaster ride. Also, yeah, going further today, we have Canada's inflation numbers. Now, this is quite important, to be honest, because look, let's have a look what's happening. Let me just refresh my memory on Canada's interest rate. Right, okay, 2.25 currently, and they did a cut last time, so we are not expecting a cut in December. That's the interesting bit. So we're not expecting a cut in December, and at the moment, I think that despite let's say inflation numbers coming out on the lower side, for example, I don't think that it's going to encourage the bank to go for a cut. I think that their mind is set. Inflation rate, like I said, yes, year on year, we don't have a forecast, but the month-on-month one is expected to increase a little bit. The CPI trimmed mean year on year it's expected to decline a little bit. CPI median year on year is expected to decline by 1/10%. So at the moment, like I said, it's a little bit tricky. So look, I don't want to speculate too much on that. Okay, I think if we do see a higher number than the forecast, then yes, it could be a little bit of a positive moment for the Canadian dollar. But I think the Canadian dollar will remain under pressure because of the dropping prices in oil. It's good for the Canadian exports because those are becoming more attractive for the U.S. consumer. But again, for the domestic consumer, it's a little bit of a problem. Anyway, going further today, so yes, we have a few speeches here and there. As always, yeah, Kashkari speaking. Okay, that's look. There could be some market movement there. Going into Tuesday, RBA meeting minutes. Yep, that's what we're watching carefully. But again, with the meetings, might have my kind of problem with that is that they kind of confirm what we already know. So, but hey, maybe it's just an extra piece of food for the market. ADP employment change weekly, so that's going to be an interesting one. So look, this is kind of the new thing, this ADP employment change weekly, and I think this is something that the market will be very carefully monitoring because last one came out a disappointment. So yep, so the way the description goes here, the preliminary estimate of ADP National Employment Report reflects weekly changes in private employment and includes a four-week moving average of total private employment variation. So basically, yes, from here we have a weekly number, but then it kind of gets built up into a monthly number as well. Anyway, going further, yes, okay, look, in terms of this other data, again, export import prices, Bureau of Labor and Statistics. Are we going to get that? Let me just see. Tuesday, yes, we should be getting that. So hopefully we'll see something here. Yep, that's what I'm keeping an eye on. Industrial production, Federal Reserve. That's we should be getting that. I think the data should come here. So hopefully we'll see the numbers. What's happening with industrial and production, industrial and manufacturing production. So yeah, going further a little bit here, some bond numbers, blah blah blah. Okay, trade balance. Okay, Japanese trade balance. So far this one has been in the negative zone. So yep, we're seeing that the trade balance cannot get back into positive territory. It's struggling. So where the country is, it seems to be importing more than it's exporting, but there is a forecast that there's a big drop in imports, and yes, there is a drop in exports, but the exports kind of still remained in positive territory, whereas imports should be dropping into negative. So maybe we will see an improved trade balance here. So maybe with a smaller minus, or maybe even going into positive territory. Hopefully, let's see. Going further, Westpac leading index here from Australia. Okay, right. Okay, inflation. Wednesday, yes, UK's inflation coming out, and what can I say here? I can look at the numbers and say that we are expecting a drop a little bit. Look, is that going to be the case? I don't know, because again, UK's inflation is a little bit on the higher side. It's well above BOE's target, of 2%. If we do see a drop, I think that maybe the BOE will be still tempted to go for that rate cut in December. Again, that's the speculation right now. We'll have to see what's happening with the data. Also, we have Rachel Reeves delivering its budget, UK budget, on the 20th, if I'm not mistaken. Let me just double check actually. UK autumn budget day. That is happening the 26th. Sorry, the 26th of November. That's happening. Right. That's Wednesday. Yeah, the next Wednesday. Let me just double check if that's correct. UK autumn budget. There we go. Yes, sorry, that's not this week. Next week. Yeah, yeah. Okay. So coming back to this week, Wednesday, we have, like I said, we have these inflation numbers. The uh, the core the headline, sorry, year on year is expected to drop to 3.6. The core is expected also to decline a little bit. Now the PPI input output, okay, we'll keep an eye on that one, but we don't have much expectations here. But with the inflation numbers, look, if we do see a drift lower, yes, great week. It gives that green light for the BOE to go and cut, maybe, do the final cut this year, and yeah, great, wonderful. But for the British pound, I don't think that this is going to be a great thing. We could see a little bit of weakness coming in, unless, let's say, if it's GBPUSD that you're looking at, then if the US dollar will remain on the weaker side, then certainly the problem is that we could see some kind of, not a weakness of the pound. I think it could remain somewhat flat, because if the US dollar remains weak, the pound could remain weak as well on lower inflation numbers. So we could see the GBP USD pair kind of wobbling somewhere where it is right now. However, okay, what can I say? For now, like I said, keep your eyes on the CPIs on Wednesday, on the UK CPIs. Something to keep in mind for the upcoming budget, and also, I mean, it's not going to influence the budget, but the BOE's decision in December, yeah, for sure. Going further, so European Union inflation numbers as well. Look, with the European Union, I mean, most of the time they kind of come out as expected, as forecasted. So the headline year on year is expected to come out at 2.1, lower by 0.1%. The core is expected to remain the same. So, like I said, unless we deviate a lot from those numbers, then they're going to be interesting. Going further, trade balance, Wednesday, let's have a look. Is that correct? The trade balance, Bureau of Labor and Statistics, come on, give me that. State job openings, organizations. Okay, I really don't see that here, but hopefully we'll get it. So yeah, we'll see how that's going to play out. Certainly, it's going to be very interesting to see how that trade balance looks. Going further, yep, EIA crude oil stock change, blah, blah, blah. Good, something for oil, but again, with oil right now, I think it's more driven by geopolitics and all these sanctions but apparently oil is declining a little bit, but again, I'll get to everything in a bit. The Thursday loan prime rate. So China will be delivering its interest rate decision, and the question is, I mean, are they going to shift? Well, at the moment, I think that they're not going to do anything. But again, surprises happen, so we'll keep an eye on that one. Germany's PPIs are coming out. Then going further, right? Okay, so Thursday, like I said, NFPs. That's what we should be getting from the Bureau of Labor and Statistics. The September number. What do we have here? Expectation for a 50K. Okay, yeah, maybe, but again, I'm not really trusting this data yet until it's going to stabilize a little bit. Philly Fed, that's what we're watching as well. Keeping an eye on that. Canadian PPIs. Look, Thursday is going to be an interesting one. Unemployment rate. Now, look, I think, yes, okay, let's say the NFPs are whatever, they're higher, lower, as long as they're, let's say, above zero. As long as they're above zero, I kind of don't care. If it drops below zero, then I care, because then it kind of I kind of really strong. I have a strong belief that it should be below zero. But anyway, maybe I'm wrong. Maybe going into the holiday season, they're creating some jobs, not much, but some jobs. But seeing those layoffs from big companies, then it's really tricky to kind of believe that. Sorry, I had to warm up my throat because I'm drinking tea right now. So look, but the unemployment rate Now the unemployment rate, now that's where the interesting bit comes in, because if somehow it shifts higher, now yes, you might create still some jobs, but if suddenly your unemployment starts picking up, because that's what the issue we had before. Unemployment was stable, it kind of kept on the low side, but NFPs were dropping. Job creation was dropping, and that was this. So basically, we're not hiring more, but we're not firing. But if suddenly we're not hiring more, but we are firing, then that's where the problem arises, and this is where the markets should be worried. And all these big tech, news about all these major deals, I don't know. You can throw them away, because I'm sorry, but to whom are you going to be selling your services if nobody can feed their families? I'm not saying, look, a 4.4, 4.5 jump. I'm not saying that that's critical. What I'm saying is that it's the beginning of a trend. It could be a beginning of a trend. So this is what the market picks up on. It's this is where all these major moves start to happen, because it's before the big problem arises. Anyway, so yeah, going further, like I said, wow, the economic calendar is full, so we'll see what's going to happen there. That's on Thursday. Friday, Australian numbers, the estimates of the S&P Global Composite Manufacturing and Services PMI. Japan inflation numbers are coming out, so keep your eyes on that. Friday is going to be also an interesting day, so keep your eyes on that. Keep checking the economic calendar. We have a lot of manufacturing, a lot of composite manufacturing and services PMIs from various countries, but the estimates, so keep that in mind. Also also the US as well. Yep. Anyway, let's jump into the stock market, ladies and gentlemen. Let's have a look at what's happening with Nikkei today. Nikkei, we saw a little bit of retracement. Look, in general, going on Friday, we saw this major recovery. If you were watching the cash indices before the US opening bell, we were selling off rapidly, heavily, but then, and actually we were in a very big low, and then during the US session, we recovered. Yes, the market still showed that it's in the red. It's in only Nasdaq was slightly in the green, but overall they're kind of flat. But if you were watching the cash indices, then you'll see a major move. So anyway, long story short, Nikkei, like I said, yes, we saw a little bit of retracement back up, but to be honest, I am not really rushing into things here, because we are still below the 50,600 territory, somewhere around here. I talked about this hurdle. This was my breakout to the downside, and there we go. We dropped and we stayed. We stayed below that area on the weekly, and yesterday we're seeing a nice kind of little recovery, but we're still below that. And we're also below the 20-day SMA on my Bollinger Bands. So I'm kind of leaning a little bit more towards the downside. Shanghai Composite, let's have a look at this one, also a little bit on the negative side, but this one is testing the lower side of the broadening triangle that I've showed you on a 4-hour chart, I think, or on a 1-hour chart, which was better. Yeah, 1-hour chart, there we go. So look, I mean, what can I say? It's there is a chance for this one actually to push higher. Don't get me wrong. I'm not gonna lie here. Although I'm not really in favor of that, but I think that there should be some more downside. But again, whatever I think, is the market doesn't always do whatever I want it to do. So I'm gonna have to approach it from the kind of common sense perspective. So look, I will say this way: as long as we stay above the lower side of the broadening triangle, there is a chance of a rebound back up. Let's jump into the U.S. markets here. So yes, this is what I'm talking about. So major reversal last week, major reversal. Yep. And we did look. This is a mess a little bit, and I think what I need to do: new week, new start. Let's remove everything and start fresh. I think that this is the best option here. So I think I want to draw an upside line, but again, it's very tentative. Is it this one? Yeah, I don't know. Is it this one? Yeah, a little bit better, but I don't know. Is it this one? It's all subjective. So that's why in these cases, I just go closer here, and I just capture these, moves here. So that's what I can see here. We have an upside line taken from the lowest point of October. and we're still above it. So there is a chance of this one actually rebounding and pushing back up, which actually kind of did last week. But we still close on the daily chart. We still closed below the 20-day SMA. So in a way, this is kind of, yes, there is this a chance for this move happening. Actually, let me just check what's happening right now on the cash index, because indices right now are rallying a lot. Honestly, they are rallying a lot, and I don't know. This is really, really, I don't want to say dumb, but there is not much good news in general. There's a lot of worrying happening, and this is the problem. The markets have become like just, oh, like somebody made a deal on AI, like, okay, but that's not the real economy. The real economy that there are, but they're really trying to hide that very much, and this is what probably where the frustration is happening. So 47,250 right now, a little bit higher where we closed from where we closed on Friday. So we're still below the 20-day SMA. Okay, so there is still a chance for a drift lower. So look, I'll say it this way: as long as we stay below the 20-day SMA, I'm cautiously bearish, because more bearishness will come on a break of this upside line, and then yep, we can go for the 50-day EMA and maybe the 100-day EMA. But certainly for the upside, I would prefer maybe to see a push above this 47,413-ish zone. If we can get that, I'll go to the upside. S&P 500, beautiful recovery here. We're in a triangle pattern. It seems like a symmetrical triangle, so maybe we're in a bit of a squeeze here. What's happening on the S&P 500 right now? 6,774-ish. So a little bit above, yes, a little bit of above, actually above this hurdle as well. So what can I say? I think the 20-day SMA will be something that I'm going to be watching very carefully. If we will continue to trade below that, maybe a drift back down could be possible. NASDAQ, very quickly, NASDAQ pushed higher. We actually crossed above this hurdle, to be honest. And where's my NASDAQ? We are actually crossed above the 25,000, this 183.95 zone, and we're now above that hurdle. Now, if we do stay above this 25,195 zone, then great, I'll go a little bit higher. But if we continue to trade below the 20-day SMA, look, I'm still kind of a little bit. I'm currently a little bit more bearish. You probably can hear it in my tone, that in my voice, the voice of the sound of my tone, the sound of my voice. I'm a little bit bearish because I would really love to see a little bit of a correction back down. Why? Because for me, the markets right now are a little bit irrational and a little unlogical, and I don't know. I don't know. There is something brewing up, maybe, but maybe it's my pessimism here or something. But I'm not a pessimist. I never call myself a pessimist. I'm more of a realist. But again, sometimes there's a thin line. But anyway, look. Long story short, I would say it this way: if we somehow drop back below the 25,195 territory right here, I will consider a move to the downside. Yep, I have a bunch of alerts here set up for myself. These lines here, these are alerts. I want to see if we can actually reach those. And to be honest, I think I'll drop this one a little bit. Look, this is where we dropped on Friday. We were at these levels, and then look at this. During the market session, we recovered. And wow, that was a big move, honestly. So long story short, for now, I can see that the stock market is in this strong recovery mode, but can it be sustained? Now, I don't know. This is a big question to me, to be honest, a big question to the market. I really don't know. I mean, yes, we're getting, by the way, just to let you know, we're getting NVIDIA's earnings, and that's happening on Wednesday. Let me just double check. Yes, Wednesday. So we're getting NVIDIA's earnings after the bell, after the US closing bell. And the question there is this going to be sustainable? I mean, can they continue feeding us with like how great their chips are and how everything is great? And So, like I said, for me that's a bit of an issue with them and a little bit of a moral issue or something. One interesting thing, like what I talked about on Friday, and if you haven't watched my show on Friday, Michael Burry, the guy who kind of called out the crash, the financial crash of 2008, he was basically saying that those loans are like worthless. All those CDOs, contract debt obligations. Please forgive me. CDOs, collateralized. Sorry, not contract. Collateralized debt obligations. So these were sold, to investors as kind of something very good, like AA ratings, and that's why my skepticism comes in, where it comes from, because you have these rating agencies who are shouting about like how great this thing, that thing is, or it doesn't have to be rating agencies. It has to be other places, other agencies that, oh my God, like AI is great, and stuff like that. But we were here before, and we were in these situations before, like the same dot-com bubble, where everybody was evaluating big companies. Cisco was one of those. Where's that? Cisco. Yep, Cisco Systems. Come on, I mean, you were you were really like, you had major evaluation right here. Look at this. Look at this massive run here. It's like NVIDIA, honestly. Like, and eventually, like I said, eventually it will fall. Eventually it does fall. Yes, over the time it kind of rallied and picked up again. So we are at levels where we were during the dot-com. So Cisco basically right now is at levels where basically from where it started selling off in 2000 during the dot-com crash. And I mean, like I said, the market evaluated the company then majorly, and there was a wrong evaluation and kind of crashed. Yes, it picked up. Yes, it's not a bad company in a way. It's still working, operating. But just what I'm trying to say is to you that the market is sometimes irrational. Probably, maybe most of the times, but it is irrational. There is this concept of rational expectations, but it doesn't really work. So you need to be very careful. And whenever we see something like this happening, right? I'm sorry. Is this logical? AMD, is this logical? I don't know. And that's why, like I said, that's why my issue is that we're having these major valuations. By the way, Google. Now, Google, this one will have to correct lower at some point. Honestly, this is just crazy to the upside, like it was crazy to the upside. On Friday we closed here, we did come out of the box here and through the lower side, so in a way it's kind of a little bit on the bear side to me, but I think that the Google is right now correcting back to the upside. Let me just double check very quickly. Let me just see what's happening with Google right now. If it's gonna load up here on my side, but yeah, apparently it's not gonna load up here. Yes, I think there's connection issues that I'm facing right now a little bit. Yeah. Okay. Alphabet, where's my alphabet? 291, ladies and gentlemen, we are back here. 291. I don't know, honestly, this market to me is like, wow, it's really, I mean, come on. Long story short, keep your eyes on this, keep your eyes on these major players like Palantir. Let me just check where Palantir is right now. Yep, we closed on Friday at 174. Right now, 175. Okay, not big of a difference, But I think Google, like what's happening with Google. Google is more of an issue that why it's rallying. I think because Warren Buffett has added Google into its portfolio recently, from what I saw, and they kind of kicked out Apple, to be honest. And Apple it seems like they don't believe in Apple anymore. So, well, at least it looks like that. Although good sales of the the latest iPhone, I already got lost in the numbers in there, but don't use it. But anyway, so yeah, looking at this picture here, I think that we need to be very careful right now. The stock market is, like I said, in such a major recovery mode that it's rallying right now. Today, this morning, from this morning, from the early hours of this morning, when all the markets in Asia opened up, we jumped really from 25,000. We're now like on the Nasdaq, for example, we're now around 25,250. We already jumped 250. Look, it can go higher. Yeah, sure, of course it can. But do we want to see it going higher? I really don't know. It's, for me, it's like I said, it's really unlogical. Anyway, and actually, another thing, if you watch Jim Cramer, like one of those guys, I'm not a huge fan of everything what he says, because again, you need to filter all the time. But one thing that he said, and that really shocked me last week, that he's no longer bullish on the stock market. That's the interesting bit. We'll see. The German index DAX. Okay, we saw a big decline. Now DAX is a little bit on the problematic side here, and we are not really seeing major rallies right now, because again, the stock market, looking at Nasdaq, for example, right now, the cash index, it's like just booming, to the upside, whereas this one is just kind of flat. So I don't want to rush, I don't want to say anything, but let's say the FTSE 100 also a little bit on the modest side. So Europe is a little bit careful and cautious, and I'm leaning a little bit more towards the idea that this is a better representation of what's happening in the market, not like overinflated or anything, or covered with AI deals and stuff. Anyway, DXY. Let's have a look at the last index here, dollar index. Now, okay, I talked about it last week, and I said we broke the upside line. We had this tentative upside support line, which was kind of broken. Again, it depends on how you draw it. You draw it this way, it broke it. You draw it the other way, it's still in play. Like, very, very subjective. And why not draw it from here? So it's really subjective, and that's why I removed it, and I actually prefer to stick to the EMAs. So far, I can see a nice rebound from the EMAs, from the 50 and the 100. And the question is, can we travel back above the 99.40 zone? If we can push and stay above it, I'll go to the upside. If we can remain above this hurdle, this 99.40, then yes, great, more buyers could join in. So keep that in mind. If we do see, like I said, the labor numbers coming out, let's say, better, maybe this could give a little bit of a boost for the US dollar. Because why? Because if we see nice numbers from the US labor market, then kind of this pushes away the whole idea of the Fed going for that December cut. And this is what we're seeing right now, these little kind of comments from different officials that maybe it's not needed, maybe the December cut is not needed. And if this is what they're saying, then my question is actually, do they know that the job numbers are going to be good in that case? So maybe they know that the job numbers are going to be good, and there's not going to be you don't need to say that we need to go for another rate cut in order to boost the stock market, in order to boost the economy, because everything is fine, right? So that's where, like I said, the problem is, in a way, and this is where the kind of the crazy bit lies, because that means that they know, right? That means that they know, and if let's say the job numbers come out right now on a better side, they will say, you see, this is what we were talking about. We kind of, I knew that the job numbers are not in a form that, like, I guessed it correctly. No, but actually I freaking knew. So like I said, that's why for my side, I am really interested to see what's going to happen with the labor numbers. Are we going to see better numbers? If so, then all these talks right now that they're, we don't need to see a December cut, and that's, you can see from the percentage here. Then yes, it will be justified that maybe we don't need December cut. However, like throwing everything away what I just said, sometimes we get these scenarios where they will create as much hype as possible. They will talk as much as they, but actually if they have set their mind already on the cut in December, then yes, I would probably do the same thing, in order to mislead the market. So in order to kind of say, no, we don't need a December cut, but then closer to December, you know what, guys, I think we need a December cut. Because why? Because then you will miraculously get the NFP, the new NFP. Now we're gonna get this weekend the September NFP. We're not gonna get the October NFP, but we will get the November NFP, which will be at the end of November, or actually beginning of December, like the week before the interest rate decision. And that one, for example, will be very bad, for example, right? Oh, like suddenly, oh my God, you know what, actually we need to go for that December cut. And like I said, that's why how you kind of play the game here, how you play the market. So you get like I said, and then you could see your still kind of strengthening, still supporting the stock market. Right now the stock market is kind of should be falling in a way, right? The US stock market should be kind of retracing lower, but it's not, because we should be seeing a move lower, because it's because nobody believes that, at the moment, looking at this CME Fed Watch tool, that nobody believes that there's going to be a cut in December. So we're below 50, so we're more in favor of no cuts. So that's kind of a negative for the stock market. But the stock market right now is rallying, but it's pushing higher, because again, I think that everybody's so like, oh my God, like Nvidia, oh my God, AI, wow. And that's the hype right now that's driving the market. Whereas, and then when everybody will realize that it's no longer the hype, actually this is crap, because maybe Nvidia will report not the best numbers, because it already kind of did last time. And then the market will say, ooh, you know what, actually no, not good. And then this is where, like I said, this is where the Fed, hey, you want a rate cut? There you go. Anyway, let's jump into the Forex world, ladies and gentlemen. Currency is, yes, AUDUSD. Let's see what's happening here. Still the same analysis is valid. I am waiting for clearance through one of these trend lines, and then I'll do something about it. While we remain in here, I'm not really touching it. AUDNZD, drifting, continues to drift lower, but this is very interesting. My hurdle here, this 1.1490, I love it. Why? Because that's the highest point of 2022. It's still acting as a good area of support, although we did have a false breakout here on Friday, but we still remained above it. So, yep, let's not rush into things there. Look, as long as we stay above this hurdle, there is a chance for a push back up, but I prefer to see a push above this area first. But if we do drop and stay below the 1.1490, then yes, I'm going to go lower. AUDJPY, okay. We can't really, go away from this 100.95 zone, and if we can somehow push a little bit above it, then great, I'll go higher. But because the stock market right now is a little bit on the shaky grounds, I think investors know that as well. So, yen buying can resume very quickly. EURUSD, let's jump into that one. I talked about it. I said, like, after breaking this downside line, my theory is this: after breaking a trend line, we tend to revisit it from the other side. In this case, we see that the pair is now revisiting, or trying to revisit the trend line. And the thing is that if we do want to see lower levels, we actually do still have a chance. We have a chance. We need to see just a drop back below this downside line and back below the 100-day EMA, and then we'll take it from there. For the upside, well, again, a rebound from the a rebound from this trend line could be nice, could be great. So if we can get that breakout here, wonderful. I'll go to the upside. EUROJPY, EUROJPY, it's look, it seems like it's showing me signs that it wants to go a little bit back down. At least at least for now, that's what, you know, that's the feeling that I'm getting actually, and the not only the feeling that I'm seeing, you know, what's happening here, the structure. Well, let's see if we can stay below the 179, or in general below the 180 zone. The psychological 180 is the barrier. If we clear that, I'm going to go higher. If we don't, well, yeah, it's going to be a little bit of a problem. Going further down the line here, GBPUSD, let's have a look at this one. Yeah, like I said, this one still looks bearish, to be honest, and, you know, I'm going to stick to that. So we're keeping an eye on the inflation numbers, UK inflation numbers. So if those come out on the lower side, then we can see GBPUSD actually maybe drifting a little bit to the downside, given the fact that DXY started curving back up. USDCAD. Now this one is an interesting one. So look, Canadian dollar could remain under some selling pressure if oil continues to slide. Yep, that could be the issue there. USDJPY. Now this one, we're near key area of resistance around this 154.80 zone. If we you see this one remaining above, or I should say above this area, above the 154.80, then yes, I'm going to go higher. But if we somehow break the steep upside line, we fall below the 20-day SMA, and we fall below the 152.83, then yes, great, more sellers could join in. USDCHF. USDCHF having a nice little rebound here, that's fine. Looking good actually, and what I said to you recently, that if we do stay somehow above the 0.72 0.7925 zone, I'm going to consider maybe a push back to the upside. Beautiful move here on Friday actually. Look at this, 0.7875. Interesting, very nice, very nice. Where was I? Probably one of the pairs that I missed. Okay, well, anyway, you cannot really track all of them, but certainly it was a good move here. So nice, beautiful reversal. Let's see if we can travel back to this 20-day SMA, which coincides with the 50-day EMA. Let's jump into gold. Commodities, ladies and gentlemen. Yes. So my idea here is this, and this is what I talked about, and I've sent this little piece to our VIP clients. And I said that, look, we were here, we did this nice little retracement of Fibonacci's, push towards this 61.8. We held nicely here, and then we started drifting lower. So when I was at the time of writing, we were still here somewhere. I said, look, if we do drop below the 50% here on the Fibonacci, my next target is the 38.2. There we go, boom, we tested that, but here a hold up could occur because we also have a strong area of support in a way here. We're around this 4,075, but also we have the 20-day SMA. So if we continue to trade above it, then there is a chance of a push back up. But if we somehow start clearing this 38.2, ladies and gentlemen, I think this is looking quite bearish, and it looks a little bit on the lower side. Look, for now, I will say it this way: if we do drop below the 38.2, which is around the 4,075 territory, my next target is the 23.6 on the Fibonacci, which is around the psychological 4,000 zone. I think this is quite doable. Silver. Now, silver had a good move recently, like last week, up until Wednesday last week. It had a great move. Then boom, almost on Thursday, almost reached the all-time high here. Look at this here. Look at this candle. Traveled higher and then quickly sold off. The next day, boom, Friday, selling off rapidly. Today, what's happening today? Now, what I'm seeing today right now is, yes, we're drifting away. We're kind of struggling with that $51 mark. And I think that there is a chance for this one actually to drift lower. I would love to see that. I'm not going to lie. I would love to see it drop back below the 50 zone, because honestly, looking at this picture here, I talked about it and I'll say it again. Look, we are going through some historic moves, and this recent rally, look at this. We're actually retracing back from the highs, from the all-time highs, and there is a chance for a major reversal back down at this point. Of course, we'll have to monitor November very carefully, accurately, but we are, like I said, we are going through some kind of history. These such levels, such hyperbolic levels, have not been seen. Well, only this is the third time in history. Like last time was 2011, then before that it was 1980. It has to correct lower at some point. Don't get me wrong, I believe so, and I think that this is where the interesting bit comes in. You know, so yes, there is demand for silver, because silver is one of the best conductors of electricity. However, if we see some negativity around this whole AI thing, which we are already seeing, that means that maybe everybody will become a little bit scared, and they might dump the precious metals. And if the stock market starts reversing lower, I think precious metals will also reverse lower, despite this whole talk of, you know, them being this safe havens and all that stuff. So be careful. Platinum, very quickly. Let's have a look at this one. Daily chart. Beautiful decline. Hey, so far so good. This downside line, I think, needs to be adjusted here. I think something like this has to happen. This is the kind of the logical way, and I think I have to say that maybe we're actually forming. No. Maybe we're forming a nice little triangle, descending triangle pattern. According to all the TA books, such patterns tend to break to the downside, but a confirmation break through one of the sides is needed. Palladium. Now, Palladium, my love for Palladium is going to be around 1,350. However, if we do clear this, I'll love it even more, because actually I'm from all the metals, I'm bullish on this one. But my ideal scenario is to see a nice major reversal on this one here towards maybe these areas near the 1,250, and then maybe consider a move back up. Looking at the monthly chart, we're seeing a nice, after a good run last month, maybe a nice retracement back down here could be possible. Let's jump into copper. Copper is stuck here, but seems to be willing to go a little bit lower. Let's see if that's going to happen. Sugar. Oh, my beloved sugar is popping. There we go. There we go, ladies and gentlemen. Look, I talked about this sugar. I talked about these little areas, and I said, look, keep your eyes on this, because this is quite important. If we do clear the 14.74 zone right there, boom, to the upside. Look, I'll give it a little bit of a chance here. If we do, let's say, see a little bit of a retracement and somehow stay above the 14.74, I'm leaning towards the 15, maybe even 16 territory. We'll see. Let's jump into oil. Yep, oil on Friday we saw a comeback here, but today we're seeing a drift back down. Anyway, we remain below the $60 mark, so that's a bearish indication for me. And to be honest, I'm going to continue sticking to that. If we break the downside line here, I'll go higher. Yes, great. But for now, it's on the shaky ground, I would say. I'm cautiously bearish on this one. Brent oil, similar story. Yep, I'm cautiously bearish on this one still, because we're still below this downside line of mine, which is drawn from the highest point of June, yep, of this year. Let's jump into natural gas very quickly. What's happening here? A little bit of a movement back down, but probably a little bit of profit taking. So we could see a little bit of a retracement back down here. And if we do, in general, if we do remain above the $4 mark, then yeah, there's still a good chance for a move to the upside. Bitcoin. So Bitcoin. Look, let me just grab some tea, basically. Look, my target has been reached. I said it before and I'll say it again. My target has been reached. I talked about it. I did the crypto updates here like a few days ago, 11 days ago actually. And this is what I said, that I'm kind of, if I'm leaning for the downside, I'm actually leaning for some of these areas, maybe even lower. But for now, this is great. This is what's look. There is basically reports that there was a some money coming out. So yeah, Bitcoin's total market value has plunged about 600 billion from an October high, according to data compiled by Bloomberg, and crypto volatility is expected. So okay, so there is money coming out, and I think that this is quite logical because again, I think that the market needs to understand that Bitcoin no longer is something like a barometer for whenever, like a safe haven or something, right? I will stick to my words, and I'll say it again, that in my opinion, all these cryptos will start separating, like in terms of who's who. Like one will be more like a stock, the other one actually will be more like a commodity, and the other one will be probably more like a treasury or like a security, or the other one will be actually like an actual currency. So for Bitcoin, what do I see? I see Bitcoin more of a I. It's difficult with Bitcoin. I don't know. I mean, I want to say stock, but no, not really. I think it's more going to be like either commodity or like something like a treasury note or something. But yeah, that's how I see Bitcoin's future in a way. Like Bitcoin Cash, for example, right? I see this one more as a stock, right? As if it's going to be like a stock. Looking at Bitcoin Cash, look, a nice little coiling up moment here happening. So we need to see a clearance through one of the sides before before we can get excited here with any of the directional moves. XRP USD, again, beautiful move here to the downside, but this hurdle here, this 2.19 zone, is providing good support. I need to see a drop below that. If I can get that drop again, and we see the body of the daily candle staying below this hurdle, below this 2.19, I'm leaning towards the downside. Ethereum, also beautiful move lower. I'm not gonna get bullish yet because again, I think still there is a chance for a test of that 3,000 zone. We came very close to that. Maybe even falling briefly below the 3,000 zone here, testing the 2,880 zone right here. But again, like I said, I'm being very careful, at least for now. I think there could be some more downside. Litecoin, we dropped below the psychological 100 level. Now, Litecoin looks like more of a commodity, to be honest, for me. But again, it's it's subjective. Nothing is objective here, but it's subjective. So I think that there is a chance for this one to drift lower a little bit, but again, I would prefer actually to wait for a drop below the 90.30. Dogecoin, this one looks like more like a currency, to be honest, or actually sometimes stock. So because again, if Tesla moves and Musk says something, then this one makes a move as well. So maybe even towards the stock side, yes. Polkadot is this one's interesting. I can't figure it out yet. Which one's it more? For me, it's more. But what I know is that it's currently still balancing above this 2.77 territory. If we continue to trade above it, there is a chance for a rebound actually. So let's keep an eye on that one. And finally, Tron. Now this one for sure for me is a currency pair. It moves like a currency. It forms things. Look at the moment. Look at this beautiful formation. Look at this beautiful price structure. We're stuck in between the 0.2883 and the 0.2985. If we continue to remain in between those levels, I'm not really doing anything. Once we start clearing one of the sides, then I'm going to consider the next short-term directional move. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I hope you found it useful. Thank you, everybody. Look, I hope, like I said, I hope this kind of brings a little bit of light. I talked a lot for an hour, and there are different topics to talk about. In general, the market is an interesting place, and where we are right now, we're actually in some instruments we are at historic levels like silver. Don't forget about that one. And the stock market right now is a little bit unlogical, but hey, what do I know, right? It's not us who are shaping the market. It's somebody out there who's dictating the rules, and we are just trying to play along. Ladies and gentlemen, thank you very much for watching and listening. I really hope you found it useful. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you on Wednesday. Bye for now.